Now, most of you are not quite so sure whenever you take losses. You are not unsure if the loss was a good one or it wasn't a good one. So into today's video, I want to provide a step-by-step guide on how you can really understand a good and high quality setup regardless the output of it. Hello traders, welcome back to the channel, and it is always my pleasure to have you all on board. Honestly speaking, I'm really enjoying to read your comments, and honestly, it's one of a kind feeling, because when I think in past 10 years, I had the exactly same goal as for now, to pass the truth, to pass the reality, and my experience to be more specific in what I understanding from the system that I'm using. So I'm always enjoying to see that I'm adding value into your trading and providing that extra clarity into it, which is really humbling. So guys, please, if there is one channel that you would recommend others to come over and over, please definitely let them come to our channel. So with that being said, I want to cover on topic that is often underestimated in the trading space, and I would love just to kind of give you my experience into that using the system that I'm using. Now, most of you are not quite so sure whenever you take losses. You are not unsure if the loss was a good one or it wasn't a good one. So into today's video, I want to provide a step-by-step guide on how you can really understand a good and high quality setup regardless the output of it, and what things that you need to truly focus on so that you can get the same exactly consistent results over and over, regardless it being a loss or a win. You already understand in the first place if it was a good one or a bad one. Now let's dive straight into the chart work. Now I'll be using CHF JPY into this because it's one of the trades that I took from last week, and I thought that just I could really dive deeper into it and give you clarity. Now, when it comes to the higher time frame, I normally look onto the higher time either of this one. I either look for area, I either look for structure, I either look for the candlestick, and I'll show you on how I really apply that into my chart work. Now, for instance, from this example, we can see that whenever we are starting to put the confluences in taking a trade, we have to layer these three things. So for me, I always layer them together. So from here, I can see we are already at a area value where price can really turn around. So the key number one thing that comes to mind is just selling off, right? So I'm now starting to stack the confluences if I'm going to sell off or I need to wait a little bit. Now let's stack the confluences together. Now from the higher time frame, the first thing I normally look on area, because sometimes you may get an area, sometimes it's a structure alone, sometimes it's a candlestick alone, and sometimes 2 out of 3, or sometimes 3 out of 3. So from this scenario, we can see we are sitting at an area value, which is a good area value, and we can see that we finished with that rejection candle, which shows that the area was quite so strong. And the good thing is that we rejected through, not two, because if we rejected two, that could be something different. However, if we look just to this last part of the piece of the puzzle, you would have seen this. Let me just show you exactly. You would have seen this. There was a kind of a structural approach toward this particular area, and that was acting as your clear middle section. So there's a kind of a reversal structure into it, right? And we can all see that, right? So we already see the area, we already see the structure, we already see the candlestick formation. All of them are still giving us that edge that, okay, we have a better chance of the price to really come to the downside. Now let us just jump straight into the lower time frame and see what the lower time frame are telling us. Now into the 4-hour time frame, you need to ensure that whenever you are laying out those particular confluences, you need to ensure that they are supporting what you already see in the higher time frame. For instance, we've seen that we are at area value, we have seen the candlestick is supporting for the sell off, and there is a reversal structure. Now from the 4-hour time frame, what exactly one thing that stands out we can see, and that can really support us to really say that, okay, the higher time frame is being supported and we can sell off from there, is these particular rejections over here. We can see we had strong bearish rejection, which are giving us a confluence that, yeah, there is a better chance of us really pushing to the downside. Why? Because we have seen this red line area, which we have seen it clearly from the daily time frame. it's what we are focusing on is the area. So from this particular view from the H4 time frame, now we can see clearly that the candlestick are rejecting, which are the bearish candlestick are rejecting at an area value, and they're finished with bearish, which still gives us a confluence that we are likely to sell off. Now let's come to the H1 time frame. Now when it comes to the 1 hour time frame, you need just to look for the supporting evidence or confluences that will give you an edge to execute the trade. And you have to be very keen, because sometimes most people want to enter a risk entry while the market hasn't provided us with the opportunity for the risk entry. And some of you may want to take the reduced risk entry while the market provided you the opportunity for the risk entry. So it's always about understanding on how you can position yourself way more better so that you can manage your trade accordingly. Now, from H1 time frame, we can see that the market was really squeezing around this value area, and afterward we saw that there was a clear impulse to the downside. And what do we need? We need to see only a continuation at this stage. Now let me show you and just push the price a little bit forward so that you can all see exactly what a bit happened over there. Okay, let's just do something like this, and let me just unhide this one so that you can clearly see. Okay, now at this stage we had this clear continuation, which we can see it more here from the H1 time frame. Now some of you may ask me, why don't you enter into the 15 minutes? Let's go to the 15 minutes. Now if you come to the 15 minutes over here, you would have opted to enter for the risk entry, maybe roughly around this area, and then your stop loss just being over there, or whatever you might want to put. But the question comes, can we really manage to this kind of lows? Can we really manage into that? Or are we just playing for the sake of just playing? Because at the end of the day, we are still looking at these particular lows, which let me just show you. I'm looking to manage around these particular areas. But by the time on my end, I did not see that. So if someone took the risk entry, yeah, it was there, but a little bit increased the risk, because there was a chance for the price to really evolve to create that steady touch. But from this example over here, which is from the 1 hour time frame, we can see we have a clear flat continuation. So what I opted to do is just I opted to enter as a reduced risk entry over there with my stop loss just above. However, I understood that there is a chance whereby the market might just come to the upside to give us that particular third touch, and then we might have something like that, and that could give us a better edge to position ourselves for the risk entry. But on the other side, or on the flip side, I understood that okay, the market has already provided what we want in the first place, which is a clear 1 hour continuation that we can see. And this is a first continuation flag in the run. So you don't have to really, put any doubts, put any pressure into yourself. Understand that you just have all of the confluences, and the market playing out or not playing out, it is what it is. And some of you might ask me, what about this week over there? Would you not have seen that it increased the risk? Let us go. If you see weeks like this one, you see it a week over here, and if you go to the lower time frame compared to the time frame that you saw it, and you see a week, then it means that is just a volatility week. Let us see. So from here we can see it was weak, and that's why you can see the price was holding around that particular area. So I did not have to bother about it. However, then let us see what exactly happened next. So from there, I stuck the confluences and I was tagged in from there. Then what happened exactly next? I was tagged in just within some few hours next. But I understood and I accepted the risk of what it comes. However, from the confluences that we have stacked it together, starting from the higher time frame, walking to the 4 hour to 1 hour, that is what you only need, guys. That's the level of clarity you need. And if you focus on that, then I'm promising you, you will be confident into your trading and the system that you are using, understanding that the game plan that you followed along with your trading plan will always pay out. So guys, thank you so much for taking your time to watch till this end, and I'm promising you guys I will keep delivering the best of my ability to ensure that I'm fulfilling the promise that I set to God. So thank you so much, and wishing you all the best. Have a fantastic day and enjoy the rest of your week. God bless.